And are we to see even sizable business trusts from the warehousing and logistics space in the future? Let's find out from our panelists today. Let me welcome on the show Yash Gupta, the director at Soy Asset Management, Alok Saigal, who's the president and head of Nuvama Private, and we have with us Anshul Saigal, who's the MD and CEO at Welspun, One Logistics Park. Gentlemen, so good to have you on CNBC-TV18.
Thank you.
Now, Yash, I know you for such a long time, and you have been a big player in the commercial real estate space and the investor interest in this. How close is the warehousing space when it comes to the commercial real estate kind of returns, and why this interest building in this particular sector?
Thank you for having me back, Nisha. Thank you. Great question. It is very close. It is any income-producing assets. Commercial assets are assets which are, once you make the asset, produces an income consistently, and warehousing is probably the fastest growing part of the commercial real estate industry today. And the reason why it's so is because people are very aware of the fact that when India grows, when it goes from a 3 to a 5, 3 to a $10 trillion economy, there will be a huge need of manufacturing companies, of supply chain companies, of e-commerce companies, etc. And the governments like PLI, China Plus One, etc., only promoting the need for warehousing. But this warehousing is very different from the warehousing of the past, which is grade A commercial, global quality warehousing of the kind that Welspun One is doing. That is in huge demand. The older warehousing, we don't think will stand the test of time.
All right, and it is getting more organized as a sector as well, right?
Absolutely.
So Anshul, you've launched the second fund. You're raising funds for the second fund, which is dedicated towards warehousing.
Yeah.
What is the rationale for investor interest in this, and what is the modus operandi of your fund?
Good question, Nisha. And thanks for having me on the show. I've known you for a while. So just from a sector perspective, warehousing as a sector itself is very attractive. It's a very core sector of the economy. So just look around where we are today, everything from the clothes to the table to the chair to this glass to this. Everything comes from a warehouse.
Yes.
Everything has passed through a warehouse during a life cycle. Government has recognized the need for logistics. So we've launched a national logistics policy. Cost of logistics today is very, very high.
Yes.
We are losing about 6% of GDP just on the inefficiency of logistics costs.
Yes.
Government has clearly recognized this. We saw COVID. Your question is why investors should invest in the sector. Because warehousing is one of the few, if not the only asset class, which is infra-backed and economy-backed. So it's very core and integral rent-yielding portfolio that you can create eventually from an asset class which mirrors real estate, but is really infra. So that's the long and short of it.
That's right. In fact, warehousing and logistics is the nerve center of any transaction in the country and how the economy moves. And we have seen in the past that manufacturing units have also tried to have their own service centers to service their top clients closer to the place because of the lack of warehousing in so many areas. So that's developing. E-commerce and GST has given a big push to this particular area. But Alok, what Welspun One Logistics Park is attempting to do, you have a good view of how HNIs are now looking at it. We already have the types of Brookfield, Blackstone, who are really building up a big platform in this. But what about the domestic pool of capital that is now coming in, and the interest from a very diverse set of investors?
Sure, Nisha. Thank you for having me on the show. So there are basically two aspects here. The warehousing space per se has been in existence because it's a rent-yielding asset. Has been in existence maybe 50 years.
Yes.
But it has been very, very unorganized. And people would, anybody who could afford would build a warehouse, give it on rent, and find places. And that part is possible. possibly now going away. Now you have obviously the larger e-commerce players that have come in, likes of Amazon, have come in. There's a Flip, there's Cart. There are obviously, and with GST coming in, what has also happened is that outside a city center, there's a need of a large warehouse, which is basically becoming like a hub for delivering to a particular area.
Yes.
So all that has actually changed, and that is making warehouses very organized. So the first wave of this organized, like in anything that has happened in India, whether it's a commercial real estate or some of these things, is that the private equity funds, the larger players, the larger global players picked up this space. So likes of a Blackstone or a GIC or a Temasek, or a Brookfield, these guys came in first. They spotted the opportunity first, and therefore the Indian investors never got this organized opportunity. So they were always in this unorganized opportunity where they are building, they are finding the tenant, and they are basically collecting, which is very neither scalable and very inefficient. And I think while Anshul is on the show, so I can compliment him. He's possibly Welspun one has been the first such AIF in India, which is actually giving Indian HNIs, family offices, the opportunity to play this in an organized way. What it does is it takes care of the governance, it's the scale. And this is also greenfield. It is not that they are basically acquiring warehouses and just refurbishing it. They're basically building build to suite.
Right.
So I think that is one big opportunity.
Yes.
The second place where again there's a lot of action, but it's not so much relevant for the larger set of clients, is the fractionalization. Again, the challenge with fractionalization is that while there may be a quality asset, again, it is subscale at the end of the day because it's one warehouse which you're fractionalizing. Here, we're talking about a huge logistics park which you can actually potentially offer to investors, and a group of logistics parks you can end up doing tie-ups with, likes of Amazon and all, if possible, to do a series of warehouses. So I think this is a far better route, and now Indians are getting. At least the HNIs are getting access to it.
So Anshul, it's a development model that you have.
Yes.
And it is very different from the listed logistics companies, warehouse and logistics companies that we already have in existence. So the HNIs, the retail, in a way, the higher net worth retail participants can have a piece of the pie straight from the development of the warehouse. And then they can get the benefit of the return mechanism that comes and which kicks in after a sizable work has been done, or it's commercial, or it's realized, or rentalized. That's what you're focusing on. What are the return matrices you're looking at?
Yeah, absolutely. So imagine, you're seeing all these REITs today in the market. You're seeing the Embassy REIT, you're seeing the Mindspace REIT, the Brookfield REITs. These REITs are fully developed, office-developed parks or IT parks, which are stabilized rent yielding. So all you have to do really, is collect the rent. And what this vehicle does is it passes the rent to an investor who can invest as little as potentially 500 rupees. Right? So they've dematerialized real estate effectively, right? You don't need to now go buy a 5 crore office. You can go put in 5 lakhs if you have lakhs, if the comfort to do that. Similarly, what our fund does is a step forward, or if you look at it very early in the journey, where it's a full cycle development. So this is, imagine you got an opportunity to invest when these guys were buying land and building these office park and signing up an IBM or a Microsoft or a Cognizant. What we're doing is giving investors an opportunity in a dematerialized format to invest in a full cycle development. And the beauty about our model is that because we're integrated, fund and development, the investors do get the full cycle return. We're not passing on a developer's margin back to the developer.
So there are two ways of looking at it. Either you catch it at the inception and you get the full benefit of the return of the funds. and you also take equal amount of risk if you get in so early in this stage. So there are two ways of looking at it, and the HNIs who are putting in, they know their.
That's why you need sophisticated investors. They understand. They understand that they're taking.
They know the risk parameters.
And the minimum ticket at the minimum is 1 crore that people put in.
But what's interesting about what Welspun 1 is doing, and taking on the point that domestic investors are involved. Many of the risks, whether it's on the land stage, whether it's on the development stage, etc., are very local, which require local expertise. So very often the foreign funds, the foreign participants who want to do this don't like to take risk. But there is substantial value that gets created. When you take a piece of land, when you get it converted, the approvals, when you make a warehouse, when you rent it out, in that situation. So what is interesting about this is there's local expertise and local management, which is using local money to create significant value, which then becomes marketable to anyone global, or local.
That's right.
And that's how the whole full cycle is getting completed, which is a new thing for the market.
But you know how the foreign investors have been investing in the commercial real estate.
Correct.
And now building up their housing portfolio. What is the difference? And are they taking less risk? They are basically backing either the developers or they are through inorganic route beefing up their portfolio.
So I think it comes in all sizes and all shapes. So there are some international developers or international funds who are okay taking the local risk of development themselves, but there are very few of them. And even there, they will tie up with someone local, either a local team or a joint venture of an international team with a local team, like an Indo space, who would want to do that. But a majority of them, if they can get access to large-scale warehouses without having to take the risk, like Blackstone has when they bought Anshul's old portfolio from Embassy, etc. A lot of them prefer that because they're saying we are in the business of the yield, of the rental that comes in, not in the business of development.
Right.
So both are there. I think there will be more FDI trying to buy warehouses than to develop it.
All right. So that's the difference, and those are the various pockets of investments and investor categories which are interested in this space. But ultimately, it is the return, the metrics as well as the exit opportunities that the investors will look at. We'll come back on Big Deal and we'll discuss exactly that in the warehousing segment. Stay tuned to Big Deal.